Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, another metric you need to be aware of. It's very important. Let's dive in.
Trade Genius.
Okay, Bob, we're going to throw some stuff at these guys this week. This one's kind of important. You know, if you've been following along with the podcast, you're not going to be surprised, but I think you have to kind of add it to the mix as far as putting the pieces to this big puzzle that's coming together here and what that means for us going into next year.
Let's throw the chart up here first, so that could be the star of the show. This is amazing to me, that everybody's calling for the new bull market when you have the percentage of stocks in the Russell 2000 that are not positive earnings-wise. And this is, if you think about this for a second, Phil, this is the time where we had the greatest stimulus thrown at the U.S. economy ever, and the company still can't maintain a profitability. This is huge, and I think this is going to be one of the reasons why we're going to see this general erosion in the stock market. Remember, the only thing really holding the stock market up now is really the Mag 7. So once those start going today, ASML leaked actually reported their earnings that sales are falling. Nvidia took a hit, and I think people are going to be shocked how much Nvidia is going to hurt the indexes and the Mag 7 going forward.
Yep. And I think that Russell's really, to me, the tell. I think if you had priced in the Russell performance in the stock market, then I think we wouldn't be trading anywhere near all-time highs, right? We'd be, essentially an inverse of this chart where, you're probably heading lower if this was pricing in the stock market was actually pricing in, because this is, negative earnings. Companies are on the rise. So what you also notice too is that as this starts to increase and steepen, that usually rhymes with a recession. And you can see the last, they kind of have COVID marked off as a recession. That's kind of a weird anomaly because of the way that was handled. But the real recession, the real business cycles that we are talking about is 2001 and back in 08, 09. And you can see just the same trend where the Russell's not doing so good. And we got to get back into an environment where this is trending down, right? This negative earnings trending up never is a good thing. So ultimately, it washes out with a recession. Again, this is just late business cycle stuff that we're dealing with, but it's been a weird one because of all of the COVID stimulus that was injected into the system. And I think that's the thing, Bob, is that it takes a while for that to finally clean out. And I would look at the performance that we have in the stock market right now as kind of an echo bubble of all of that injection. And it's finally going to, wash out once and for all.
Yeah, absolutely. And if you go below the Russell 2000 in a private market, bankruptcies are accelerating too. Auto loan delinquencies are accelerating, and True Value Hardware going bankrupt. You have 7-Eleven closing stores. You have Walgreens closing stores. They don't close stores when the consumer is strong. So I think, Phil, this is going to be what I said. When this thing goes, it's going to be long-term go. It's going to be the Alzheimer's market. So it's just going to be the long goodbye. You're looking at 12 to 18 months of just stock market grinding down, and people are they're going to hate the stock market by the time this is over.
I would tend to agree. Do you guys agree? Let us know your thoughts below. And as always, check out our stuff over at tradegenius.co. We got a number of different packages depending on your needs. Look forward to seeing you in the room. We'll talk to you in the next one. Take care.
Trade Genius.